Good morning. Today is Thursday, December 11th. I'm Joe Terril, president of Terril & Company, private wealth managers headquartered in St. Louis, Missouri. This is another video update for our clients and constituents who want to know what our thoughts are on many subjects. We're going to go somewhat quick today, and basically I think I'll start with our outlook for the economy is that it stays strong. We're watching consumer spending because it's driving a big part of the economy, and we're also watching technology spending and what is being spent to facilitate what may or may not be the fantastic growth of AI. And those two things are carrying the day for the economy. We don't see that changing. In the investment markets, we believe short-term rates are probably close to bottoming, maybe one more cut next year, but longer-term interest rates, as exemplified by the 10-year Treasury, are probably going higher, not lower. And in the stock market, we believe that the Magnificent Seven and the high-flying AI technology stocks are an accident waiting to happen. And we find real value in the stocks that they do not like because they don't have AI exposure, or they don't have 50–75% growth associated with them. So that's a real quick snapshot. So I'm going to turn it over real quick to Bill Newbold. Bill, tell us about equity, and I think today is an example of what we're saying. The NASDAQ is down based on some disappointing technology earnings last night, but the Dow is up 500 and some odd points.
Yep.
So,
Thanks, Joe.
Bill, I'm going to turn it over to you.
You bet. Thank you. So as Joe mentioned, we talk about rotations in the market. We see this a lot, and it's getting more exacerbated as we move into the end of the year. So you can see investor flows moving from group to group. Today, the artificial intelligence trade is under pressure because of Oracle's results and some of the debt that they are taking on to fund their data center development. You're seeing smaller cap stocks trend higher. The recent interest rate cut is a positive for smaller names. And you're seeing crypto under pressure, right? So this is kind of investors saying, how we view risk in the market. So today, crypto's under pressure, Oracle's under pressure. But all through this volatile period over the last few months, we've continued to be disciplined in our approach, and we're buying names that trade at much cheaper multiples versus the market. So we continue to buy names like Caesars Entertainment and the gaming and online sports betting. We're buying Mosaic in the phosphate and fertilizer area. Continue to buy Solventum, which was a spinoff of 3M, operates in the wound care and dental area. We really like Toast in here. We've been adding to that. You may see Toast if you're out in a restaurant. They focus in the software and payment space. And we continue to add to Disney. We think they're well positioned in the content space. But overall, staying very disciplined. We think it's served our clients well, and that will be our focus.
Bill, for the last few years, we've been buyers of financial stocks, particularly the big banks and even the regional banks. They're making new highs right now, true?
True.
That's the type of stocks people like,
right,
that have real earnings, real dividends,
right,
and maybe have nothing to do with AI other than ultimately they may be a big beneficiary of it.
You bet.
Bill, thank you. Russ, I'm going to turn to you because you and I talk constantly about the economy. Explain to people what we were talking about the other day with the new tax bill.
Thanks, Joe. As it relates to kind of the macro environment, the economy, as Joe mentioned, We believe it's going to stay strong. One thing I think that is consistent is the stimulus that you're going to see moving forward. Specifically, if you look at that new One Big Beautiful Bill, tax bill, there's some tax incentive, tax deductions that are going to be included moving forward for the next couple of years, which I think will stimulate especially the consumer. You saw the Fed cut interest rates. Now, does that happen quickly in terms of stimulating the economy? Maybe not, but it's definitely headed in the right direction, and I think markets like that. To Bill's point, small cap stocks are benefiting from the anticipation of lower rates. And so you see that rotation. But we believe the economy is going to continue to be strong in 2026. There's a lot of stimulative efforts that will create a tailwind.
My only question in that bill is, how are we going to pay for it? It is stimulative because it's tax cuts for a lot of people. But it's going to segue me into turning to you, Dave, and talking about interest rates.
I'm glad you're asking Dave that question.
Well, I really do worry about how are we going to do all this without just ballooning the deficit into a figure that's going to make it difficult to finance. But Dave, I'm going to turn to you for a quick scenario on interest rates. We're on record of saying longer term rates are going higher, not lower, regardless of what they do with short-term interest rates. But tell our viewers a little bit about what's going on in the interest rate world.
Well, thank you. Yes, as people know, they did cut rates. The Fed did cut rates a quarter point yesterday, down to 3.5% on Fed funds.
And Dave, just one interruption, I apologize. There were some dissenters yesterday.
Yes, and it wasn't
Unanimous.
It wasn't unanimous, and you had dissenters on more aggressive cuts, and you had dissenters on saying no cuts. Saying that the yield curve is steepening, which is probably a reason banks are doing better. Their cost of funds are coming down, but the price of money that they're loaning to their customers is not. So their margins are going up. But if you take a look globally, global interest rates are hitting 20-year highs, whether it's Germany or Japan, just sort of across the board. And that's significant. Those markets have had historically low rates for longer than the U.S. has.
But very unlikely that our 10-year U.S. Treasury bond yield can go down in the face of those type of yields all over the world going up and hitting highs.
I agree. And then also you have to say, how are they going to fund the deficits? Not only in the U.S., but globally. And that's one reason I believe gold continues to have a bid, where gold is 4,200, and it just it's very stable right now.
Dave, thank you, and let me do just a little bit of housekeeping announcements here. Kristen Wood, who is on our investment committee, she will be back next video. She had a family commitment this morning that came up that's preventing her. We want to have an investment committee that has a broad base of views from all ages, backgrounds, etc. But Kristen will be back next time. Mainly, we want to thank you. It's been a very good year here at Terril and Company, not only for our performance, but assets under management. We're not at $1 billion yet, but we're getting very close. And most important of all, we want to wish all our viewers the very best for the holidays, for those traveling, safe travels, and we will be back maybe with one more video before the end of the year, subject to what's occurring in the markets. With that said, Brian Curtis, who helps us produce it, best to you and your family, Brian, for the holiday season. Thank you.
Thank you.
Thanks.